Swayam Prabha. Digital India. Educated India.
This topic called commercial bills, and commercial bills are known as negotiable post-dated checks, and the context in which they are created are when there is a real goods transaction. I buy something from somebody else. Often I cannot make the payment now. I don't have the cash or the money in my account. So I request the seller to create a bill which I would endorse, countersign and accept to make the payment in future. Once this paper is ready, it can be a stamp paper, it can be some other mode. In India, unorganized sector uses a lot of commercial bills very informally on a piece of paper, like a writing pad paper. They would just write something, put a rubber stamp, sign it, and becomes a commercial bill, because they know each other so much, so well. In old markets like in Delhi, Bombay, Lucknow, anywhere, Kanpur, where for generation after generation they are in business, and those shops are known and commercial bills are created, and these bills are very informal bills. It cannot be backed by any rule of law, cannot be backed by any court proceedings. They are very simple, and you can make it formal also, like big companies, organized sector companies create a commercial bill, very formal. I haven't seen a commercial bill. I wish I get a photograph of a commercial bill. I will show that to you if I get one. Now, this post-dated checks, there is this concept of drawer of the bill and drawee of the bill. I told you the drawer of the bill is the one who sells the goods and expects the payment, but he cannot get it now, he will have to wait. And the drawee of the bill is the person who purchases the goods and is supposed to make the payment, is the drawee of the bill. And then what happens was, this bill gets circulated often in the secondary market. The drawer of the bill can hardly wait. Once the bill is ready, it goes to the bank and says, cash this for me. Bank knows him, bank knows the drawee of the bill also probably, and bank cashes it, but at a discount, and that discount rate is the bank's income, because it will have to wait out that period till the drawee of the bill makes the payment. All right. Now, I come to classification of commercial bills. The first important classification of commercial bills, there are various kinds of commercial bills, and terminology is used by this kind of subject is commercial bills can be either clean bills or documentary bills. Now, let me explain them to you. So, clean bills or documentary bills. Commercial bills can be clean bills and documentary bills. Again, documentary bills are of two types, and they are popularly known as DA bills and DP bills. There are two types documentary bills, DA and DP bills. Now, let me explain this to you. First, let me explain the documentary bills, and then I will go to clean bills. Documents are of various kinds that become a necessity in the process of creating the bills and the payments to be made, etc. Let me give you an example. Suppose goods are getting shipped from a seller in Madras to a buyer, some producer in Kanpur who has bought them. So, when the goods are coming, certain documents are essential to claim those goods. For instance, the railway receipts, the railway booking, there can be some insurance costs associated with the goods. Often goods are insured. Even in a small packet I have seen in post offices, when the sender is sending off a packet containing some item, some household goods maybe, to somebody, often they insure. And then there are tax documents. There is a VAT system in the country today, value added tax. What it means is, at every stage of the production, there is a value added tax that has to be paid, and therefore, the amount of tax you would pay would depend also that you have a copy of the tax receipt from the previous producer who has produced the good up to some point and sold it to you, and now you are going to take it to the final stage. If you cannot show those papers, they will ask you to pay the tax on the entire amount, and also tax evasion issue is there. So, the previous one, you make sure that he has paid all the necessary taxes, otherwise the tax authorities will come to you and they say, Oma, this amount of value you have created already, all right, say iron ore. At the raw stage, when it is mined, it has some value, but then when it is processed and going through a steel plant, and various kinds of steel is getting created, various value are created. Various value when it is created, there is this tax that is imposed. So, tax receipts, various kinds of papers or documents become important in this normal business transactions. Railway, freights, the truck on roadways, for instance, booking that you have done, the papers, insurance, then these indirect taxes, I am talking about VAT, etc. Often the income taxes become important. That person who has sold the goods, has he paid all his taxes? Somebody may ask you in UP, because often it is across different states, and different states have different rules, and different kinds of tax obligations are there or requirements. Now, what happens is, these are all kind of can be called title to goods, like if you do not have them, you do not have a claim on those goods. Now, deliverable against acceptance is a kind of a bill, these are documentary bills I am talking about, is that the documents are withheld by the drawer of the bill till goods have been negotiated. All right. Maybe you have also made an advance payment, but goods will come to you until, because you have said that you cannot make the full payment now. So, bill has to be drawn. So, the drawer of the bill will withhold all the documents and will not hand it over to you, who is the Kanpur buyer of the goods, till I fully accept and endorse that bill. So, when till the bill becomes final, completely safe for the seller of the goods, he will not release the documents, and without the documents I also cannot claim the goods, or I will be in trouble. All right. Okay. So, deliverable against acceptance, DA bill, is essentially I accept the bill properly, just not maukhik, not telephonic conversation, not email. Formally, when the paper is ready, called commercial bill, then that fellow in Madras will hand over the essential documents to me. All right. Okay. Another one is that deliverable documents against payments. This often banks do. Banks will withhold all the documents and not give it to, or most of the documents, not give it to the buyer of the goods, who is the drawee of the bill, who is supposed to make the payment in future. Often banks do that. they will withhold all the documents till the payments are made. Once the payments are made, that guy in Kanpur will receive all the documents. So, what has happened in the between, secondary market has created, the bill has been drawn, it is deliverable against payment agreement is there. The goods may have arrived also, minimum documents required to clear the goods, take the goods off the railways, go down into my shed has, but not all documents are with me. In the meantime, the drawer of the bill has sold the goods, sold the bill to the bank, an intermediary has come. Bank now has taken possession of all the documents, because bank has made the payment to the drawer of the bill. Now, the bank waits for the drawer to make the payment 2 months later, 3 months later, and the drawer of the bill does not have access to the documents. It is like a security deposit, like a mortgage. When I give you a loan, I take a security deposit or a mortgage, which is called collateral. I sometimes keep collateral, physical goods or some papers. And what happens is that bank would withhold all the documents, because that is a DP bill deliverable against payments. That means 2 months later, the documents will be handed over to him, say the sales tax receipts of the previous producer, income tax receipts, many other things can be the insurance papers, all sorts of things. So, documentary bills are, there is this huge importance on documents, and the question is whether the documents are to be received or handed over right now, or you have to wait till the payments. So, DA and DP bills are created. Once the documents reach, all right, once the documents have been received by the drawer of the bill, particularly in case of DA bills, deliverable against acceptance, DP you have to wait out, deliver acceptance, then the bill is that is what is a clean bill is, that is what I have gathered. Clean bill is nothing, now all formality is over. Goods have been shipped, all documents have been received by me in Kanpur, it is a clean bill now. All I have to do is to make the payment in future. But it is not a clean bill until I receive all the documents. This is what I have gathered, what a clean bill is. So, it looks like in case of DP bills, it is never a clean bill, because the payments documents will be given only at the time of payments. So, I mean the bill matures and it becomes a clean bill only then, because the documents are not with the drawer of the bill. All right. Then you have, just like bank accounts, demand bills can also be of two types depending upon the maturity of the bill. They can be, commercial bills can be demand bills, and usance bills. Demand bills, like demand deposits, the payments have to be made on demand. So, it is a very short term bill, essentially, very short term bill. Okay. Often demand bills are like, goods have been shipped from Madras, all right, along with the documents. So, as soon as you receive the goods along with the documents, all right, there is a bill in process. I have not made the payment, I make the payment immediately, that is the agreement. Demand bills. So, payment waits out that shipment period, the transition period from Madras to Kanpur, maybe a week or something, or 10 days, very short term bills. I receive the goods, make the payment immediately, and the agreement has been a demand bill. Often when I buy goods in Kanpur city, all right, demand bills are getting created. Goods delivered to my residence, like a refrigerator or almirah, and I have given an advance to gain the confidence of the seller that I am interested in buying it, no faltu cheese. Bills come as demand bills, goods receive, I sign that, I have received the goods and I hand over the cash to him, sometimes check, sometimes cash. Demand bills are very simple bills. Usance, you understand the word now, is time. That means, it has a maturity period which is not immediate. 15 days later, 1 month later, 2 months later, 3 months later, the usance bills. Which are the proper or real commercial bills? All right. So, commercial bill, I hope you have understood by the word real just told me that this is first time I am going through a bill here in the money market, which is a real bill. All earlier bills that I have discussed, treasury bills or commercial paper, a CD or call loans, they are all financial bills, if there is any. All right. All market does not have a bill, commercial paper, CD, treasury bills, they are all financial bills. This is the first time I am talking about a real bill. That means, there is a real transaction, physical goods are being sold or transacted, just not money. Not like I borrow money from the bank, not a financial transaction only, real transaction has taken place and a financial bill has been created. So, these are called real bills. All right. Okay. So, when I first heard about this commercial bills, there used to be this language used, real bills, because commercial bills used to be referred to as real bills. Now, usance bills and demand bills are like that. Demand bills are made on payment on demand, which is the shopkeeper what he tells me in Kanpur city, that ठीक है ये पहुंच जाएगा तो आप कैश उनको दे देंगे, बिल में लिखा होगा. I make a received signature that I received the goods and I hand over the cash and some transport costs sometimes extra, that is it. Because the transporter is a third party, transporter often is not the shop, and this often happens. In international economics, this is a issue, macroeconomics, balance of payments account mein, that export import, the way it takes place between countries, there has to be a shipping arrangement, and often the shipping party is a third party. And I used to tell them the story about Onassis. I do not know whether you heard. Onassis is from our generation or our father's generation. He was a famous Greek businessman. Greece specializes in transport business. So, and say the petrol transport is Japan specializes in that, oil tankers. They manufacture them, supply them. Their goods are shipped across, and there are companies who do that. And Greece used to be famous those days. And Onassis, the famous shipping tycoon of Greece, you know who he was? He married after John F. Kennedy was killed, his wife, Jacqueline Kennedy. Onassis married Jacqueline Kennedy after John F. Kennedy was killed in the 60s. He was that influential, imagine, and there are books written on him. President of United States, his wife, he married this business guy from Greece. Achha. So, then I came to know why is it so. Greece, some countries specialize in certain things. This is international economics. So, shipping costs are important. All right. So, you can learn more about that in international economics when you take that course next year. So, balance of payments account has an item there, services account, all these items go into it. And often the agreement is there whether the exporter would provide for the services or the importer would provide for the services in that written agreement contract between two parties, say India and Germany. India is buying some goods, manufactured goods. Who would ship them? Often the bill is paid by the importer, but the shipping arrangement is made by the exporting country. All right. Sometimes it is the importing country who will arrange for the shipping services themselves. Not only make the payment, also arrange for the contract with a shipping company. And countries specialize in shipping. This is very important in international economics. All right. So, now, commercial bills, demand bills and usance bills, I will come to that. because I've immediately it occurred to me why I'm saying this, because bills are just not domestic bills or inland bills. There are a whole lot of external bills. When countries are trading with each other, bills are created. That means the same thing. You are buying goods from somebody, you are not going to make the payment today. You are going to make the payment tomorrow. The question arises here, within a country, even people don't know all the companies when you are buying goods. So, it's a question of trust. I am coming to that issue. Internationally, a company in India, how would the German company who is selling the goods would know that this fellow in India is a trustworthy company or not, who is buying goods from me and is asking for a commercial bill to be created where the payments will be made in future. So, there are enormous amount of issues here, complex issues. Okay. I am going to get into those issues soon. Before I do that, I am doing a classification of commercial bills with their names associated with them. So, this internal trade and foreign trade both creates bills. So far, it looks like I am talking about only bills within India, they are getting created, or within any country X getting created. But actually, there are a whole lot of foreign bills that are getting created when, say, a country trades with another country, and often the payments in these foreign bills are very interesting. The payments, I sell some goods to, say, a Middle Eastern company, all right. So, the bill gets created, suppose a commercial bill is getting created. The Middle Eastern company will probably there can be an arrangement, will make a payment in US dollar in a bank somewhere in the Middle East, maybe, not even in India. I will have the responsibility then after that remitting the funds from that bank to my country. This is where corruption comes also, because what happens is, if he makes the payment there and I do not show it to my country and keep the money there, which I may use during vacation, which I may use doing something else, I avoid the entire tax payment. This is where corruption comes, and some countries allow you to keep money, your money, white money or black money, whichever, very openly, very freely, very open society. Take it. Oh, who wants to know whether you made the money by cheating your government, whether you made the money from selling of arms in the illegal arms market in the world, whether you made this money from something else. I will allow you to open it. This is where the Swedish banks and Indian government are tussling, and only US so far had the influence on Swedish banks to force them to release some information about some Americans holding accounts there, accounts with all sorts of illegal money. But India compared to US does not have that influence on Sweden, on the government, etc. But the Swedish economy, first world economy, amazing, has a very important component, which is their banking system, which grew on such illegal transactions. Unbelievable. What a contrast. Sweden is a first world country, one of the highest per capita income in the world, has an important sector in their economy, the banking sector, which deals with whole lot of criminals and illegal money.
So, is it Sweden or Switzerland?
Oh, sorry, Sweden or Switzerland, Switzerland, sorry, I am very sorry, Switzerland, I am very sorry, Switzerland. Why I am calling Sweden, Sweden? I confuse this too. So, the Swiss banking system, which is part of one of the top countries in the world in terms of Human Development Index, which you learned in the previous course, in terms of per capita income and whatever, has that kind of a banking system. There are other countries also which allow you to root your money, keep your money and all that. Now, the point I am trying to say, these commercial bills have a character where a bill has been created, but the payment is not made in India, or Indians maybe sold it. The payments are made somewhere else, or you sold some goods and they ask you not to make the payment there, make the payment in some bank somewhere. So, you have to arrange for that, make the payments there, some other country. Sometimes they specify the currency in which you have to make the payment, not necessarily US dollar, maybe something else. All right. So, this is what has been going on right now also. Luxembourg, many other countries, some islands, they have become heaven for illegal money. You park them there. Now, these therefore, you have another classification which are called inland bills and foreign bills. Another classification of bills are whether it is an inland bill or foreign bills. Foreign bills are of two types. There can be an export bill or an import bill. So, foreign bills are of two types, a bill getting created when I am exporting something, the bill gets created when I am importing something. I mean, they are the same, you look at it from whose point of view. Export bill is like the seller in Madras sold me goods. So, he is creating like an inland export bill, and if the bill is getting created when I am importing something, I will have to make the payment later. From my point of view, it is an import bill or whatever. So, there are two names associated here, export bills and import bills. So, foreign bills can be of export bills and import bills. It is called what the work he did was called over invoicing and under invoicing of bills. This is the language, over invoicing and under invoicing of bills, which is an overvaluation, undervaluation of amounts essentially, depending upon which one suits you. Undervaluation, of course, to avoid taxes, overvaluation you do to get more advantage of government subsidies, etc. Both are bad, both are cheating the country. So, anyway, so examples are export bills and import bills. Export bills are drawn by the exporters from India on any party outside India to be paid either in India or outside India, remember that, and import bills are the same thing. Now, I come to the oldest form of commercial bills. I used to read a lot on them, and I had wonderful books and papers to read in Indian economics. These days it is not taught anymore, it is not fashionable. I used to learn that, and I got fascinated reading that, because there has been some very good research work done on traditional Indian bills. In India, in the agricultural sector in particular, urban industrial sector is post independence period. We did not have much industry. If you want to read up on industries in India before independence, there are some good books around which you can read. What kind of industries existed? Some of the industries you knew what existed. Tata's iron and steel existed for a long time, was there. A few industries were there, not much. Handicraft industries were there. So, commercial bills in India which are centuries old, 100 years, 200 years, 300 years old, maybe if you go back to the Mughal period, 16th century or 15th century, you will find there were commercial bills in their economy also, which is very interesting to know what kind of bills existed. This agricultural sector in India has age old bills, very old bills. So, let me talk about the bills in the agricultural sector. I would just mention one name which you know. In the agricultural sector, you have these very age old bills called hundis. Many of you know hundis. Hundis exist or exist in the agricultural sector. These are commercial bills, where the payment will be made later. And hundis are very mobile, has an excellent secondary market in the agricultural sector. Hundi gets created in a village in around say Kanpur, Dehat, and the hundi was finally located maybe in a village in Madhya Pradesh. It has traveled all the way to MP, secondary market. Unbelievable how mobile hundis are. One village it gets created, one farming community, it traveled in the between before it matured. And hundis also has two types. Hundis are the demand hundis or sight hundis have the demand type bills, or they are also known as sight. That is, they are made a payment on sight. As soon as you see the bill, it is handed over to you, you have to make a payment. Just the way I was talking about the refrigerator when I buy from a shop. The refrigerator arrives at my house and the transporter gives me the bill. On site, I see the bill and I have to make the payment immediately. So, these are demand bills. They have a name in Indian agricultural system. They are known as, do you know what they are known? Anybody knows the Indian farmers or agricultural community, what name it has given to or what name they use for demand or site bills? They are called darshani. Hundis. And then you have the usance bills. And usance bills, you understand, it will mature, a proper commercial bill, which will mature later. The payment will be made later. So, the usance one, do you know what it is called in by our farmers, etc., the agricultural sector, usance bills? They are called maddati. This is the language they use. Usance bills, hundis, are called maddati, and darshani hundis are demand hundis essentially. These are century old. So, everybody tells you, aapka desh to purana hai, commercial bill dekha kabhi? You can tell them we have commercial bills in this country for centuries. We did not have an organized sector, maybe we did not have an industrial sector, but commercial bills existed in India for centuries. And now, I do not have much information about the maturity of these bills. I have to get more, I have to read up more, but this is maddati bills in India, which are very common. You would not know. Farming community, if anybody's father comes is the farming community, then they would know a lot about these things. I used to have students here. They used to know. Their maturity is roughly about a month to 4 months. Maddati hundis, the maturity is roughly from 1 month to 4 months. And if you go to these indigenous bankers, again another thing which exists in India, banking system, which people get surprised if you tell a Westerner that you have banking system here which is century old, and they are so strong and so independent, they are still not part of the organized banking system, and RBI has not been able to convince them come within the mainstream, like our tribal community. They are never coming within the next mainstream. They are remaining outside, and they have their perfect balance, ecosystem in their world where they live. 2 places I have heard, there may be other places, do not think that hundis and these are coexist. No, they coexist in some places, but not necessary for one to have the other one in existence. The banking system is banking system, and wherever it exists, they deal a lot with these hundis, because that is a source of income. You as a farmer, traditionally farming community, you have created a bill. Now, you cannot make the payment or whatever. So, you do not know the organized banking system. You बाप दादा से सब शुरू करके वो unorganized जो banking system है उधर ही जाते थे. So, they used to go there, they still go there, and they serve as an intermediary. They buy the bills and wait for the payment to come 3 months later or 4 months later. It is a huge business for that banking community. They do a large amount of business in the hundi market wherever banks exist. That does not mean that hundis cannot exist without those banks. Hundis exist everywhere in the country, but some pockets are there for the rural banks, these indigenous banks. And these banks, I have found, there can be more literature on it, and if anybody wants to read up on them, they are fascinating. I found 2 places with specific names of these banks, indigenous banks. One in Gujarat, they are called Shrofts and Multans. Making a mistake? Anybody has a comment? No, I mean, this is what I have learned in Gujarat. And another one is, they are also famous in Tamil Nadu. They are the Chettiyars or Shettiyars. These fellows are bank owners, or they are banks themselves. And in Tamil Nadu, I have been told, this banking sector, indigenous banking sector, even issues passbooks and checks to an account holder. So, why would they care about RBI? They are there for centuries, they are doing business so well, and the local community interacts with them so well, and there is no lack of confidence. They do not care. And even what happens, this banking community offers a higher interest rate on your deposits. This is where they get the business than the organized sector banking, the organized banking sector, which is under RBI, our public sector banks and the private banks, Hong Kong Bank, Citibank, Standard Chartered, etc. They are doing so well. Now, these banks deal a lot with these hundis, particularly the Madati. One of the main businesses is this. They also have a call market, I told you. They operate a call market also. Unbelievable. So, you think India is a very funny country. Some of the things, institutions exist which nobody would believe, particularly in the Western world, that they existed here for so many years.